Good morning, Mr. Will.
Good morning, Brother Rich. How you doing this morning?
Oh, better than I deserve, my dear friend.
Awesome. It seems I've heard somebody steal that from you.
I know. I'm going to reach
Yeah.
out to that guy.
Yeah.
Violation
Oh
of
well.
trademark, but that's okay.
Yeah. That's all right. Let him have it this time.
Yeah, let him act.
Yeah. So.
Dang,
All
I was
right.
gonna. So I see that you've named today's show 200-day SMA. What does that mean?
That is simple moving average. So it's been a while since we talked about this stock market, kind of how we look at or ways to look at. Is it going to go up? Is it going to go down? And this, I'm gonna tell you right now, today's thing, 200-day simple moving average, it won't tell you either one of those things. It won't. It's not predictive, because if it was predictive, we'd all be rich.
Right.
It's one piece of the puzzle, as we've said in the past. And so I was thinking, we haven't visited these things in quite some time, probably over a year. So
Mm-hmm.
we're gonna start with this one. This one is kind of the I don't know. It's an easy first one to start with because it's very long term. It technically changes every day, but it changes once a day.
Mm-hmm.
It's not a volatile indicator like some of the other ones we may look at later on, depending on how far we take this. And it gives us a quick uh, look at the price of an asset compared to its long term trend line.
Mm.
So if someone has a very long time horizon, this is a good way to look at it and go, okay, this is where we are. And I'll probably say it about half a dozen times today because it is incredibly true. Any stock market indicator you look at can get absolutely run over by the news cycle.
Yeah.
You know,
Speaking of which, you are kind enough to send out these updates via email to me and a couple other people, and I was reading through some of them, and it's like, what's going on with Venezuela? Shooting these narco boats, and Rubio is down in Mexico City saying, we're going after them. This is just the beginning. What might that do to the markets? Because we might be shutting off the supply lines. But if the demand is still here for drugs, and I know that seems like, what does that have to do with the economy? Probably more than any of us would like to consider, because this is a multi-billion-dollar industry.
mm-hmm.
So there's a lot of things going on in the news, man. The news cycle, it's so. I mean, I look back like in 1995, I think it was 94, the O.J. Simpson thing.
Mm-hmm.
Just dominated the news cycle because there wasn't really much else. The Monica Lewinsky thing just took all the air out of the news cycle, these things.
Mm-hmm.
But now, brother, there is so much real SHIT going on right now.
Mm-hmm.
It's hard to track it all. It really, truly is.
It is. It's the other point. I've given up for the most part.
Yeah.
I don't even really try it. You can go down a rabbit hole, not even a rabbit hole, just check a number of news sites every morning, and next thing you know, it's 10 o'clock. For those that are employed, you can't do that. And those that are retired don't want to waste, a third of the day doing that.
Well, partly too, it's at some level, it's really toxic.
Mm-hmm.
Like you said, when you start going down the rabbit hole, it just gets deeper and darker, and you're like, man, you've got the Epstein victims that are going, oh, you don't want to release list? Not a problem. We're going to create our own freaking list.
Yep.
And throw it out there. And I bet you the Beltway swamp is just trembling at what these women are going to say.
Well, to your point, it's where I thought you were going with this. I thought you ran across the same stat I did for a moment. Talking about how, a string pulls over here and something happens over here. O.J. Simpson. What business benefited greatly from the O.J. Simpson white Bronco chase?
Ford?
Domino's Pizza. Their best day ever. Everybody was stuck in front of the TV.
No kidding.
No kidding.
Yeah, that's a crazy stat, man.
It is. It's just one of those things you just don't know how the strings of the universe are going to pull on these things. And or Jerome Powell can come out this Thursday at his press conference and say something hawkish or dovish, and the market moves over the next week 5%.
You
We
know,
don't know.
where were you when the Bronco chase was going? Do you remember? And
I
thank you to the 10 folks watching us live. Throw up there where you were if you remember that
Boy, I
moment.
don't remember that. I don't. Where were you at? Do you remember?
I was working the door at a nightclub, and we had a couple 100 meter long line of people trying to get in and patting them down, and everybody's coming up like, "Are you watching it?" So the club is, on the inside, but we turned the TVs on the Bronco chase,
Yeah.
so people were dancing as the
Yeah.
Bronco was going down the road, and yeah, and every customer would come up and give us a kind of a update on what was going on with it. It was just, but now I'm going with all that is to say we're striking narco boats. We've got the war in Ukraine still hot and heavy.
Mhm.
We've got this thing in Gaza going on again and again. We just bombed Iran for God's sake. We
Yep.
got China rattling sabers all throughout Asia. I mean, pick your frickin' poison, brother. We got
Mhm.
AI that's coming online and seems to be somewhat sentient, and it's only growing at an exponential rate. And
Mhm.
where are we going to be in a year or two from now? Will we be here 3 years from now? There's some really smart guys that say no, we're doomed at this point. You can't put the genie back in the bottle. So to your point, though, Will, the further you go down the rabbit hole, my man, the more toxic it is. I'm trying to
Mhm.
pull back, and I'll just kind of read the wave tops of what you send
Mhm.
me on the daily reports, and I'm kind of like, I got enough. I'm
Yeah.
moving on.
And I have backed way off from the news and the politics. I used to be that guy. I could tell you all nine rather Supreme Court justices who nominated them. I could
Mhm.
tell you all that. And then it was when I started looking at demographics, I went, you know what? This is all noise.
Yes.
And my life got a lot happier after I just dumped all that and realized it for the dog and pony show that it is.
Yeah.
And yeah,
And
that's
I think for me, it was probably the final realization of actually this administration that, oh, Trump isn't exactly what I thought he was. You're
mhm,
not going to release the list.
yeah.
You're not going to do some of the things that you said you're doing a lot. He said he was doing. I'm not completely dumping on the guy, but it's like, oh, you're just
Mhm.
like you always say. What is it? The bird that has two wings or something like that.
The bird has 2 wings, a left one and a right one, same
Yeah,
bird.
there you go.
Yeah. Well, I forgot where I was gonna go with Trump. I came across a clip of Glenn Beck, and love him, hate him, whatever, back when the, Iraq war was going, but the must have been the '08 election was happening, or the run up to it, the campaigning, and, um actually, it must have been before that, sorry, because they were still talking about impeaching Bush, and Beck said on his program, "Well, if you want to impeach Bush, here's how you do it." And he was summoned to the White House for a meeting with President Bush, and,
Mm,
Bush laid into him pretty good according to Beck, and, got that out of his system, and then, said it doesn't matter who gets in office. Um, because he's gonna get the same advice I'm getting and then make basically the same decisions. And then
mhm.
Obama did pretty much that.
Yeah.
And Beck went on to commentate that it's because they've got the same advisors. So the
Hmm.
president doesn't run it, it's the State Department, it's the DOD. Because whether it's me, you, or whoever gets into the White House, it's the advice they get, right? And that's
Hmm.
one area where I'll give Trump credit is he's his own man.
Yeah.
You know,
Love him or hate him.
yeah, and, so that may be what it takes to break that cycle. We'll see.
Well, let's welcome some folks on here. Who we got here,
Let's do
Mr.
that.
Will?
Let me scroll up here. Let's start with, Will Parker is on, coin number 800 from the great state of Montana. Will Rhodes, 2269 from Missouri. What's his coin number thing, bro?
I thought you would never ask. Becoming a coined member of the American Wear Society grants you access to the training vault where we have hundreds of videos in there, training programs on everything from white belt to blue belt, Brazilian Jiu Jitsu, gun grappling, fitness, medical, rifle, handgun, shotgun, everything you need to keep you and your family safer, how to build a go bag and what is in it. So check it out. Take a free test drive. Also, if you are a member of the American Wear Society, That's the only way that you can get to come to our high risk environment course that's going on here in Tennessee. It's a 1 week training course that's going to give you everything you need to keep you and your family safe and thriving in the 21st century. Um, we got a lot of folks on today. Donald Green is on. Mark is on from Ontario, Canada. We got Bruce up there, Scott, Troy. My goodness, Dr. Fuller is on. Mark is on out there in Australia. Thank you guys so much for being on. Yeah, so I know we got a action-packed show for you this morning.
We're very slide heavy, guys, like 25 slides. Usually I'm like closer to 15, but a lot of them are going to go quick because we're going to play a little stump the chump here on some of these here. Because it. Well, I'll get to it later on. I had some struggles preparing for today, which may be an indicator in and of itself, perhaps of my lack of intelligence. So if your green index 53, sitting right at neutral right now, everything's just kind of hanging out, waiting to see what Powell says on Thursday of this week. With this latest jobs report that was not awesome, which we're going to touch on here in a moment, it's really, really pushing his hand. I believe he's going to live down to Trump's nickname for him, too late. And to an extent, the Fed is always late because they look at backward-looking data. So yeah, you're going to be late. But we can also look at, you and I almost remember the great inflation of 2022, and remember he was late to raising rates there, right? To quell that. And there was another piece of that puzzle too that he was too late on then. He's already too late on it now. So let's dig into this chart, and then we'll talk about old J Dog here in a little bit. This is one to keep an eye on, I think. And this one surprised me a little bit when I learned this from the standpoint of the relationship between the unemployment rate and the timing of recessions. Excuse me. My perception was always that you start a recession, the unemployment rate goes up. So when in doubt, go to the numbers. And it's actually the opposite. The unemployment rate starts going up, then the recession happens, then unemployment accelerates. So we can look at this 1980. 82 is probably an outlier just because it was a double dip. Sorry about that, guys. 1990, 2000, 2006. 2020 is a little bit of an outlier because it happened so fast. And then, so we see each one of those instances where the red arrows are, unemployment starts moving up. You'll notice it's not very dramatic. And then the recession starts, and then it hits very rapidly, correct? And look where we are now over here in 2025. We're just slowly sliding up again. And if we go to the next slide, if memory serves. So we don't need to read all this off, but we added just 22,000 jobs in August. Now, first off, these numbers are always just a semi-guess from the BLS. But 22,000 jobs, you might as well call it zero. Okay. But if we take out healthcare and health services, those two areas put together added 92,000 jobs.
Yeah.
And the reason I picked that area to bring this up is that's very government spending intensive job market. Medicare, Medicaid, requirements for things. So the government can influence the job market through spending in healthcare areas and what they hand out in waivers for things as well. One area I just learned about and starting to do some research on is if this applies to anybody, I don't mean this in a disparaging way whatsoever, adult daycare for those with special needs, or mom and dad, grandma and grandpa can't really be on their own all day long, but can still be at home, don't need a full assisted living. So there's adult daycare places that these folks go to, make sure they get their medications, keep an eye on them, and then they go back home in the evening. And those operate under a waiver from Medicare. They're state run, but funded by the federal government. if those waivers go away because of budget cuts, you're going to see a plummeting in healthcare workers in that area. And that is the fastest growing area of healthcare employment. So, it's funny how one little area that I never heard of until yesterday when I tripped across a report and a YouTube video for it, um, can have these effects. So there's a lot of things that really are just unknowable for most of us because you can't track all this stuff, right?
Right.
The other part of this I want to dig into down here. Actually, go to the next slide for just a second, brother. I can't remember if I got into
Next slide. Okay.
Yeah. All right, go back. Sorry.
Okay.
So I'm going to run this one off memory. It'll probably be on a slide later, like I usually do to you. Um, they get really hung up on raw numbers here, right? We added 22,000 jobs this month. Expectations were 75,000. This number, that number, for a long time, a healthy economy was adding somewhere between 200 and 225,000 jobs a month.
Mm-hmm.
Well, but there's outside forces, and for a long time it was like that's the number, 200,000 jobs a month. If it's above that, we're great. If it's below that, we need to start getting concerned. Well, there's other factors that play into that raw number. What about immigration? If suddenly no one's immigrating to the country, we don't need as many jobs. What about demographics? If you shut off a light switch and there's nobody, or greatly reduced number of people graduating college, high school, trade school, all those things don't need as many jobs, right? How about if you deport a whole bunch of people? Do you need to create as many jobs? So this is it, if just to go to the extreme to make the point, could we have a healthy economy that added 0 jobs in a given month? Well, if no one entered the workforce and we had deported a whole bunch of people and there was 0 immigration, you could run a healthy economy with no jobs added, in theory, right? But these are all things that are happening right now. We have demographic problems here, like much of the world does. We didn't make as many babies 18 years ago, right?
It's certainly
Deported a
not
bunch of
making many
people,
now.
right? Deported a bunch of people. Immigration's down. So what is a healthy jobs number on a raw number? I don't know. But it's also going to influence people because they're going to hear, whether it's this one at 22,000 or 75,000, which was the estimate, or whatever it might be. You could even come up with a scenario where conceivably the economy could have fewer jobs month to month and still have full employment. If you want to make the scenario where there's 0 immigration, very few people entering the workforce, or let's say 500,000 people enter the workforce coming out of school. It's just a made up number. And 600,000 people left the workforce due to retirements. Well, that's a loss of 100,000 jobs.
Right.
But if all the numbers going into that, work out that way, you could still have full employment and have fewer employees. And then you throw AI into that. What is full employment when you've got computers doing stuff humans used to do?
Right.
So my point of all that is that we, as those that take in the news, need to say, okay, well, yeah, this is a bad jobs number. Period. End. Okay, but over time, does our expectation of what a good job number is need to change?
Probably.
Now, I'd say it's going to have to.
Yeah.
So it'll be interesting to see how this plays out. Of course, the media Team Red, Team Blue's media sources will spin it one way or the other. Trump's in office. Team Red's going to talk about a lot of the stuff I just talked about. Team Blue is going to be like, under Biden, we added 200,000 jobs a month, and now it's this. And then it'll flip the other way if the White House goes blue in 2028. It's all the game. So, I see Michael Gentili's on. Good to see you, sir.
Yeah, Joseph is on. Good morning, Joseph. And Will Parker says, according to one of our mutual friends, deport all 190 million legal and illegal aliens. We will have so many more resources available to Americans.
Yeah,
that sounds great, but I don't see that happening.
It sounds great, but there's also the the side of it of, okay, like, I spend a lot of time in hotel rooms.
Yes.
I can tell you I've asked for a bar of soap or this or that and have to point
Mhm.
because I don't speak Spanish and they don't speak English.
Yes.
Um, so, I've long argued that, um, a big chunk of the wage suppression here in the US has been the illegal immigration.
Mhm.
Up here in
Good point.
Wisconsin on the dairy farms, they said, well, the dairy farms will shut down without illegal aliens here to work them. Well, in the short term, yes, but eventually, if
Mhm.
you pay somebody enough money, because it's always about the money, they'll go milk cows. Pay me enough money, I will go milk cows.
But what's that gonna do to the price of a gallon of milk?
Well, it will go up, no two ways
Twenty
about it.
twenty dollar gallon of milk. Oops.
Well, and of course, if we're spitballing numbers, I have no idea what it would go to, but it would also force, I'm sure, more automation. It's already pretty automated, but I'm sure it'll
Yeah.
force more automation. Also, here's another one I like to throw out there when discussing these things with folks is what's a gallon of milk really cost right now? And they'll say,
Mhm.
I don't know, $5. I'm
Mhm.
sorry, my wife does the shopping, guys. I
Yeah.
have no clue what it costs. So let's say it's $5. Well, but how much of that is government services going to illegal aliens,
Mhm.
right? So how much of your tax bill is actually in this gallon of milk because they had to raise taxes for the services for the illegal aliens that are milking the cows. Now we know the government's never going to lower taxes, but you get my point is that we
Mhm.
really don't know what these things cost. And when you don't know what something is truly going to cost, it's impossible to make a good decision.
Yeah.
So,
And I've already told you anecdotally what's going on in the construction world, you know.
mhm,
Um, and the all the folks we used to have really good subs, I mean, that worked for a reasonable price, man, they're getting deported left and right. So it's like crap, we're scrambling and the cost is gonna go up
mhm,
because I don't have those guys I can lean on anymore to show up on time and quickly get it done and get out. I'm gonna have
yep,
to find somebody else and they're gonna work for twice the rates. And so
yep.
be careful what you ask for.
Absolutely. Michael Gentili had a comment there. Are the period reports that are less than this particular part of the transition? I'm going to assume so. Who knows on the timeline? And to his point, and I'm sure Michael understands this very well. The you know J Dog can come out on Thursday and say, you know what, we're going to cut rates by 50 basis points, and we're going to cut rates every meeting the rest of this year,
Mhm.
and that's going to affect things, right? So, and to that point, let's remember when old too late Powell uh, was too late raising rates back in 2022 when inflation was running 9%.
Mhm.
Let's remember when he started raising rates, they were still doing quantitative easy for a number of
Mhm.
months as well, which doesn't it gets reported in the financial media, but on out on regular America, it's just not a number that they follow, appreciate those sorts of things, right?
Mhm.
Right now, they're lowering rates. They're still doing quantitative tightening.
Point.
So, and so what is Wall Street and the banking world looking at more? I don't know. They look at all of it, of course, but they go, fine, you lowered rates by a quarter point or half a point, but you're still sucking money out of the system.
Mhm.
So we'll see. I really don't, as a big picture thing, I really don't see much changing in this market unless there's some sort of catalyst. There's still lots of money sloshing around out there. And if they start lowering rates on a lag, it's going to accelerate things to the
Yeah.
upside.
Yeah.
So, this is one I was turned on to a while back as a decent leading recession indicator. And this is all employees residential building construction. So this is new construction. I'm sorry, it's all sorry. Looking at too many charts in prepping for this. So they were all employees residential building construction. So you'll see it turns down actually quite a bit before the recessions. And the one thing I will caution everybody on is don't try to front run a leading indicator. So if you see a leading indicator starting to waver a little bit, don't try and get in front of it. You will lose money doing this. Ask me how I know. Okay. So wait on it. Okay, but you'll see. I mean, you're getting about a year, maybe a touch more, maybe in some cases 2 years. Look at the '06 to '08. We remember that downturn very
Oh
well.
yeah.
But employment in residential building construction peaked and started down a good 2 years
Mhm.
before that recession started. So, and we can look and see what's happened since 2012 with the green arrow there till now. So, I'm following this more closely as a leading indicator. And if we go to the next slide, because I cut this slide off at 2020.
I see that.
Yeah. Where are we now over there with our little question mark on the right?
Mm-hmm.
Is that, again, I would not try to front run this, guys. They lower rates a whole bunch. This could turn around and go the other way.
Big time. Yeah. Big time.
So I would not try to front run this. But if you see a drop happening like you see to those prior recessions, then but get cautious. But remember, he had about a year, right? Because it has to flow through the new construction ends, and then when new construction happens and people move into those homes, they buy appliances.
Mhm.
Maybe they even splurge and buy a new car at the same time. They have to decorate, they have to repaint. So that helps Home Depot and Lowe's, and it flows right through every place, right? So when that slows down considerably, it takes a while to flow through. So this is one I'll be keeping an eye on. I'll keep you guys up to date on. But you may not hear anything from me for 3 or 4 months. Because
I
if there's
tell you,
nothing to talk about, I'll keep my mouth shut.
J Dog gets replaced in what, May of next year?
May of next year, yes.
Okay. So guess what you're going to see, I think, next summer?
Rates down.
Rates down. And guess what?
Yep.
When rates down, guess what's going to happen to this?
Mm-hmm.
Yep.
Well,
So,
rates down. I would even be willing to bet they start printing money again.
Yep.
Or find ways to underpin things, underpin the banking system in some way.
mhm.
And we can be critical of that, and we should be critical of that. Because if it's not called for, then it's just pumping the economy, which is not a good thing when whoever's controlling the money loses independence from the politicians. That's always a bad thing. I don't care who's in office.
Well, guess what, man? They got the midterms coming up.
Yep.
So this could be a good trifecta. You
Yes.
get the new guy in there, rates come down, this goes up, and then you're going to have printing money. And man, I tell you what, it could speak well for Team Red. That's for sure.
Yep. See, Giles on from the Philippines. Good to see you, sir.
Ted is on us. He said, sorry, I'm late. Got a new dog. Well, congratulations.
Awesome. New dogs are fun. All right. So I think back one. Nope, never mind. Sorry. All right. So I found this one interesting here, guys. So while the Fed may soon stop pulling money out of the financial system, you mind reading off that first part for us, brother?
Sure. Let me blow it up here. The Federal Reserve multi-year process of shrinking its balance sheet, which now stands at 6.6 trillion with a T, might soon need to end if liquidity becomes more scarce, according to John Velas, America's microeconomic strategist at BYN. Congress in July raised the U.S. debt ceiling by $5 trillion, allowing the government to increase borrowing in the bond market to refill the U.S. Treasury general account at the Fed. And this is what I was talking about earlier, the birds of a feather kind of thing,
Yep. Well, and this is, Biden taught the politicians how to do this.
Yep.
Okay. And I say Biden, the Biden administration. Okay. You can, prior to that, the Fed controlled the money supply.
Mhm.
Well, they figured out if enough people want to buy U.S. treasuries, the Fed can be tightening, raising rates, doing quantitative tightening, pulling money out of the system. As long as enough people want to buy treasuries, Congress can go in and create money through the treasuries. And then you have these two forces fighting each other. And this is still going on. And my guess is this will now go on in perpetuity.
Mhm.
And they're going to fight each other. So in the past, we have seen when they raise the debt ceiling, it would be, enough to go 6 months,
Mhm.
a year, relatively short periods of time, right? Now they're going 5 trillion. Now, how long will that last? Well, we don't know because it depends how irresponsible they are.
Exactly.
Okay. But the point is, it wasn't a short, based on the numbers of the time, it wasn't a short-term stopgap. But it
Mhm.
also gives them a lot of room to run into the midterms and after, right?
Yeah.
So, um, and here in my note, we touched on the QE stuff. So now
Uh-huh.
you have these two programs fighting each other. Who's going to win? Well, I'll be willing to bet come early June of 2026, suddenly they're going to start moving in concert again. And when that happens, it could be money printing on steroids, especially if there's a legitimate stimulus to cause that. In other words, some sort of economic downturn, some sort of
Mhm.
crisis. Um, they could let's say one of those things does happen. Let's just say the timing lines up perfect. There's a crisis in April, March, whatever it is, or
Mhm.
before then, right? Um, and this starts in, and now it goes on full blown steroids early June next year, and it could really start getting anticipated in the market prior to that because Trump's going to name whoever the replacement is before that. Pick your time period before. Typically, they do it 30 days before. Knowing Trump, he'll do it well before to cut the legs out from under Powell.
Absolutely.
Okay.
Yeah.
Um, and I mean, Trump floated the idea of having, announcing even as early as this November.
Yeah.
And I'm not a fan of that idea at all.
Uh-uh.
Okay. We don't need a shadow Fed president because then who's going to listen to what Powell says? Just listen to the next person and say, well, when I get there, this is what's going to happen. Well, they're just going to discount everything Powell says.
I'm not a fan of it, but I wouldn't be surprised if he did it at all.
Oh, I wouldn't be surprised in the least. I am
Mm.
not taking the under on that.
Mm-mm.
So, um, yep. Dr. Fuller says he's headed home from the gym, 1,000 milligrams of
Mm.
Motrin, a couch, and AWS. All right, got your priorities right.
That's right.
I'm a big believer in vitamin I myself.
Mhm.
Um, so this is something to keep an eye on, guys. And this will almost happen behind the scenes in the sense that you're not probably going to hear about this on pick your mainstream, okay,
Mhm.
including Fox for the Team Red, okay. Pay more attention to Fox Business and CNN Business. While they each have their slant for sure, you'd be surprised how much they actually agree on because they
Yeah.
have to be right to keep viewership because you're messing with people's money.
Mhm.
Okay,
I don't know.
so
Kramer's didn't he still have a job?
Kramer, oh gosh, that guy. There's an inverse Kramer fund. Did I ever tell you about that?
Oh yeah. Oh yeah.
Yeah,
I
yeah.
hear it's
It
doing
it did
well.
it did really well. It does really well when things get volatile because Kramer always says buy.
Yeah.
Yeah, I've never. I mean, yeah. Let's just move on before I start
Yeah.
ranting about that guy. All right, so so let's talk about the 200-day simple moving average. All right, um, and I'll explain simple versus why the word simple is in there in a moment. Okay,
That's the Rich
uh,
Brown moving average. Simple.
well, okay, so there's two reasons it's called that. Um, it's a technical analysis that shows the average closing price of a security over the last 200 trading days, helping identify the long-term trend, gauge of market sentiment, signal potential entry or exit points for long-term investors. There's the key: long-term. The longer the moving average you use, the longer your time horizon needs to be. Match those up. Okay.
Mm.
A price above the 200 SMA is often seen as a sign of strength and long-term uptrend. Price below suggests weakness and a downtrend. Okay, so um, take the last 200 trading days for whatever the asset is, add them all up, average it out. It comes out to $100 a share. The actual price is 110. You're above the 200-day simple moving average. Okay, so whatever that is, sixth grade averages, right? There's also an exponential moving average which weights recent price action heavier than past. Okay, that's an exponential moving average. Personally, I don't really care for those. It's a Chevy versus Ford thing. Just don't care for those. Okay, so this is a 200 days, add them up, divide by 200, you get a number. Is the asset price above or below that? And what is the trend? The trend is your friend.
Uh-huh.
Okay, now the there's about typically 250 trading days in the stock market in a year. So, should we really use the 250-day simple moving average? Probably, but way back when somebody started doing the 200-day, nobody talks about the 250-day moving average. I've never heard it mentioned on TV. Everybody talks about the 200-day.
Mhm.
trust me, moving to acceptance, it's a lot easier. Okay. All right. So this is a long-term trend line. So if we go to the next chart, we're going to give some examples here.
Okay.
All right. First, we're going to talk about this. This is my experience with the 200-day simple moving average. My experience. Okay. What it is, it's a graphical representation of price point versus long-term trend. So it moves on a line, the 200-day simple moving average, 200-day average moves along a line, and then the asset price is above or below that. And we'll see on the charts here, it plots out as a line. Okay. Lets the investor see potential future direction. Note the word potential.
Angel.
The news cycle can run you over. The business can come out with great news or awful news. It completely blows it out of the water one way or the other. Okay. What it is not predictive. Again, news cycle, business cycle, whatever can cause these things to change. Bless you.
Thank you.
Price can continue moving away from the 200-day average based on outside forces. Okay. And did I mention it's not predictive?
You did.
Okay. All right. I'm going to mention it a lot more times. Okay.
Well, then why even look at it if it's not predictive? In some
Because
way.
it does give us an idea of the trend. And we're going to look at, it should be the next slide now.
Okay. Go ahead. Go to the next one.
Yeah, good.
Okay.
Yeah. So this is, oh my gosh, my line didn't come through. Oh, I'm crushed. Hold on a second. Hold on. Bear with me, guys. What happened here?
While you're doing that, I'm going to pull up Michael Gentili's comment here.
Yeah, do that.
My father's post PhD in economics revelations. Number one, there are only two people in the world who know anything about economics, the minister of the Bank of England and the minister of the Bank of France. Unfortunately, they did scurry. And two, the MBA programs introduced period accounting into the business cycle and have handicapped long-term decision making. I live with both my entire business career.
Bear with me, guys. I'm saving this. It's going to take me a minute to go through this. The joys of a live show.
Guile says I'm having a soda while listening to AWS. The sodas in the Philippines have the real sugar in them, not that corn syrup stuff, if I remember correctly.
That would be awesome because I'm trying to get away from all that garbage.
Yeah, the corn syrup.
Yeah.
High fructose.
Yep. All right. Oh, it won't let me upload it. Son of a gun.
Yeah, I don't know why it does that. Sometimes the lines will not come through.
Tell you what, let me bear with me one more minute here, guys.
Take all the time you need. Thank you to the 15 folks watching us live, and here you are watching the magic of live television.
So we're gonna call it magic, huh?
Yeah, that's right. You can always watch us on your smart TV on YouTube. Just FYI. On the YouTube American Warrior Society channel, and we have hundreds of our past shows on there.
Oh, you know what? Bear with me, guys. I'm trying to argue with the computer here, and so far it's winning.
That's kind of the way it works.
Yeah. Let's see here. All right.
Goss is rich. Will, the soda here actually has less sugar now. I'm more of a Dr. Pepper now. Yeah, same. Diet Dr. Pepper is about the only soda I drink. Dr. Flo says it's like SNL back in the day. Tony says checking in late, folks. Tony, just glad to have you. I'll tell you what, Tony, throw up the name of your company. My brother recently bought a bunch of your freeze-dried food and just raved to the family about how amazing it is. I have some of your food, but I'm not eating it. It's for the apocalypse. But maybe I will, the
Uh,
way my brother spoke about it. So please throw up the link to your company there. And Jeff and his wife just couldn't say enough good things about it. They took it on a camping trip recently, and it was just amazing.
all right, we'll see if it comes through on this one. Yeah, his food is awesome. Oh, it didn't come through.
It won't come
Oh, there
through.
it is. Okay, got it.
Oh, there we go.
I resaved it as a picture. All right, so, all right. Thanks for bearing with us there,
What
guys.
in God's name is this monster?
Um, I, I emailed you. You're supposed to look it up. All right, so x-axis is dollars, and it's an asset price. So let's just say I don't know, Nvidia stock. All right, time. You've got your time period. Okay. In a perfect world, a predictable world, your long-term trend line would be the green line here, and then we can call that your long-term trend line. We call the 200-day simple moving average. Okay. Sometimes they're a daily moving average. I have it in there as DMA. Ah, Pat's on, fellow cheesehead. Good to see you, sir. So then your purple line here is your asset price as it moves over time. Okay. And if you look at area 1 here, it's basically tracking the uptrend, right? Some volatility up and down, but fairly stable, right? And we can, as long-term investors, we could easily look at that and go, yeah, I can live with that bit of volatility. But look what happens between area 1, area 2. It goes parabolic, goes vertical, right? So that could be some great news. It could be they buy somebody out. They come up, Nvidia comes up with the new greatest chip. But you'll hear, oh, such and such stock is way overbought. And when we hear that, what we often expect to happen is the stock will correct back quickly to the long-term trend line or relatively quickly, right? And we kind of see that in area 3, right? It touched the line and then it skyrocketed and came right back down to the long-term trend line, right? But time can also correct an overbought condition. And that's where we're talking about area 2 here. And that's where it skyrockets and then it just chops sideways for a period of time until it catches that long-term trend line up again. So we're talking about a healthy, growing business here. Picture, I don't know, Apple, Google, something that's grown to a certain point that you're not going to see a lot of parabolic growth anymore. Okay. So this is the value of the long-term trend. So if we look at area 1 again, new company goes public, and then it's going to move around there. And if we get well above that, we go, maybe I should pull back a little bit, maybe not, because we don't know. We have to look at the health of the business, the health of the economy. What sector is this in, right? A great example of these is oil companies. Unless something happens that really impacts the oil market, they just sit there and churn out money, right? And they go up and down, and they can be volatile based on world events, but typically they just kind of churn upward. And maybe even a better example would be like your Johnson & Johnson, some of your consumer staple companies that people go buy toilet paper, toothbrushes, toothpaste every day, every year after year, right? So it's very stable, usually turns out a nice little dividend. And when times get bad, those consumer staple companies do well because it's a flight to safety. Okay, so the value of this long-term trend line, the 200-day moving average, is we can look at, okay, where is it in relationship to its own long-term trend, not some made-up line on a chart. If it deviates greatly from that, now we go, okay, it's way overbought or it's way oversold. Then we'll start looking at other factors that we can talk about in future shows. Okay. But it gives you a quick snapshot. You can glance at this chart at any given time and say, I'd really like to own this, or I'd really am not so sure. Right. So after it makes its move in the area between 1 and 2, when it goes parabolic like that, would that be a good entry point? Maybe not. Okay. What's Michael Gentili say there?
Says, isn't the problem that on any point on that line, there is no adequate predictor that the next or trend is impossible to predict?
Absolutely
Yeah, it
true.
is, isn't it?
Yeah, absolutely true. And we talked about that early on. Is not predictive. It gives you a
Yeah.
snapshot of where it is right now compared to that. Nvidia, it's obviously been on a rocket ship ride. But if tomorrow they come on and go, hey, we've got the next chip, even if I don't wherever they're at on their compared to their 200-day moving average right now, it will skyrocket, right? But it gives you a snapshot of where it is now compared to that long-term trend. One small piece of the puzzle.
Yeah.
Okay. And if a person's a long-term investor, really believes in, I don't know, pick the company. It doesn't matter. Really, you really believe in Apple. Okay. And it's below the 200-day, my interest would be peaked.
Mhm.
Okay. Now, if I'm really long-term, say a Warren Buffett type, really will not look at this too much. If I'm going to buy, say, Apple or the Nasdaq or the S&P every month after month, well, after it takes a huge move up, like between 1 and 2,
Mhm.
maybe I'll be like, maybe I'll just sit for a little bit on that. Maybe I'll find a better spot to deploy that money. Okay, so to Michael's point, is not predictive. We don't know. We're
Well,
playing
is the
the odds.
caveat to that, but the trend is your friend. It's not predicted, but the trend is your friend, or
Yeah,
no?
it is,
Okay.
and so this is one piece on a piece of paper. It's not dynamic like the news.
Mm.
So if it takes a rocket ship ride up, the chances of it continuing the rocket ship ride at some point start going down.
Mhm.
Okay. So let's look at some real world examples. All right. So in this case, on all these charts, the blue line is the asset price and the red line is the 200-day moving average. Let's look at area number 2 here. There is no number 1 on this chart. If we go back to the previous one for a second,
Okay.
look at number 2, ground sideways to get back to the trend line, correct?
Mhm.
Go forward one slide, please, brother. That's exactly what happened with this asset in area number 2 there.
What
You got
asset
to,
is this?
well, that's a good question. Well, let me ask you this first. So if you look at the far right of that chart, it's gone up way above the 200-day average, right? But we can
Mhm.
also see for a period of time there it stayed above for quite some time, which is entirely possible. Okay. And then on the right here, it goes all the way up, and now it's coming back down. Could be correcting back towards the 200-day moving average.
This
Could
gold or
be.
something?
Okay. Any guesses what it is? It's a
I said
stock. I'll tell you.
gold.
Nope. Go
Hmm.
forward one slide.
Okay.
This is Nvidia.
Nvidia. Okay.
Okay. Now, if you look at where that black kind of curved line is there, the first one. So you believe Nvidia long term is below the 200-day? Hmm. Interesting. Now let's dig deeper.
Okay.
This is a very this I can't remember a single time I ever bought or sold anything based on the 200-day.
Okay.
Okay. Partially because I'm not that I don't think that long term. Okay. Partially because it's such a small piece of the puzzle.
Mhm.
Okay. But I'll tell you where it got my interest was the tariff tantrum. Look how far below the 200-day it went. What
That
changed
was
in
from
Nvidia's?
tariff.
Yeah, that was
Wow.
early 2025 there. What changed with Nvidia's business when that happened? Not a darn thing.
No.
Okay. And then look the way it took off.
Yeah.
But we can also see from 2023 there through 2025, it stayed above the 200-day the entire time.
Mhm.
Okay. So to Michael's point, is not predictive. But you can also see where when the tariff tantrum happened with the black kind of smiley face looking thing there,
Mhm.
um, it gave you a quick snapshot of, okay, this is oversold.
Mhm.
And what part of the tariffs actually changed Nvidia's business? They're still grossing 70% or netting 70%. Their profit margins are ridiculously high. Also, when it went below the 200-day from what would that be, the first quarter of 22 until early 23,
Mhm.
great. Let's stack some cash in there. Okay. All right. So let's go to the next one.
And really, there's no bottom to Nvidia at this point.
No, there really isn't. Until somebody comes along to compete with them, it's a no-brainer.
Good luck with
Okay.
that.
All right. So quick look. Overbought. Is this overbought or oversold currently on the far right of the chart there? way above our 200-day, right?
Mhm, mhm,
All right. And you can see how this one moves around a fair amount.
mhm.
All right. Because the next one, we'll see what it is.
Okay.
This
Gold.
was your first guess. This is gold. Okay. Now, this is a perfect example. I've got the red arrow pointing down. That's where it would revert to the line, revert to
Mhm.
the average, rather, long term trend. But to our point, the news cycle can run this over. Powell comes in later this week and says, "Hey, we're going to cut by 50 basis points. We're going to stop doing QT, and we're going to cut every meeting the rest of this year." What's
Gold's
that do to the
coming.
value of the dollar?
Yeah.
Goes down. What's
Yeah.
happens to the value of gold?
Yeah.
Goes up.
Yeah.
So this will not, the 200-day will not tell you what to do for these other factors. This is where we have to layer in following the news on these things, understanding the relationship between assets.
Gold spot price right now is $3,638.
Hmm.
That's insane.
It is.
That's 2,000 more than I was paying for an ounce of gold back in 2020.
Hmm.
$2,000
Yep.
up per
I
ounce. That
remember
is
I bought my
crazy.
first gold at 900 an ounce.
Wow. I
So
should have been buying it back in the 90s, at $400 an ounce.
heck, buy in the 70s at 40.
Oh,
If
time
you're gonna
machine.
dream,
Well,
dream big, brother.
I know you're,
All
you're
right, so
right.
let's keep going here. So
Okay.
this one, ignore that red straight line, guys. I forgot to take that one out. So this one you can see chops around quite a bit,
Hmm.
up, down, back and forth. Looking pretty overbought right now, though, isn't it?
Yeah. Yeah.
Yeah. Any guesses what it might be? It's related to gold in a way.
Silver, is it?
There you go. Go to the
Okay.
next one. It's silver. Okay.
Huh.
Now again, and silver futures prices are actually above 40. This is the spot price on silver. So is it going to go down? Well, if you just glance at this chart, you'll say, yeah, that's going to go down. I should sell all my silver. Well, there's outside forces at work, but
Yeah.
it does give us one little piece of the puzzle. Okay. So I don't want anybody to take this to mean that we should just look at the 200-day and buy or sell, but
Hmm.
we're going to add pieces of the puzzle as we go along here. Okay. By that, I mean, we go along over the next number of weeks here. Okay.
What I don't understand is
Mhm.
why it's so far out of whack, the gold silver differential, because they
Mhm.
have ran together over time.
Mhm.
And I forget what the ratio is, but at a pretty steady ratio. And now that ratio is blown out of the water.
10 to 1 is the historical go-to number.
Hmm.
Right now, that would be, oh gosh, what would it be right now? Hold on.
Well,
I'm going to
silver
math.
ask right now is $41.55. And
Right now, it is 87 to 1.
see, I mean,
Yeah, it is way
what
out
the
of whack.
hell?
Silver's got a lot of room to run, and it may sound like I'm contradicting myself because I'm adding to my silver position consistently right now. And you'll say, "But Will, it's above the 200-day because the
Mhm.
200-day is one small piece of this." Okay,
I
like
love
everything
Michael
we've talked
Gentili's
about.
comment. I'm sorry, I didn't mean
Um,
to interrupt you.
no, you're good, man. When the 200-day is one small part of this, it's a quick snapshot. Where are we at? Okay, on a longer term trend. There are so many pieces of the puzzle here, and then the news cycle. Because
Yeah,
if they keep printing money, you can just take all these and throw them away.
yeah.
Okay. Now there'll be winners and there will be losers within that. But overall, if they keep printing money, everything's going to win, just like it has since 1982. Okay. So this is more trying to play, I don't know, play the edges. Also, it can identify some opportunities. And we're going to look at a few of those later on in the show. Okay. What's Michael said there?
When someone figures out quantum computing at scale and does that turn NVIDIA into the best buggy whip supplier in the automotive market?
The
I
buggy
love that
whip.
analogy. Yeah.
Yes. Why you want to explain the buggy whip analogy to those that may
Oh,
not know?
well, I mean, I read something one time like they were calling the locomotive the Iron Horse, and there were CEOs that didn't understand what that means. Well, it needs to have a whip on it. Like, not that kind of horse, sir.
Yeah.
You just told me it's an iron horse, right? So let's have a whip. And there was like brackets to put the whip for the freaking thing that didn't exist. But the problem with quantum computing, it's got to be, as I understand it, it's got to be almost at not that you can get to absolute zero with cold, but I mean, it's got to be really, really cold to get these things moving at quantum states. But somebody will crack the code on it. And I think we're only a couple years out. So his point is incredibly valid. Um, but, NVIDIA isn't just semiconductors, it's also part of the AI movement, is it not?
It is absolutely.
So hell,
And there's
and
a
NVIDIA might figure out the quantum computing, I guess is
could
where I'm
be.
going.
Yeah. And this is one I'm going to come back to the buggy whip because I heard a different buggy whip thing with that. So let's look at maybe an analogy between Bitcoin and with crypto in general,
Mm-hmm.
and what you just touched on with Nvidia or whoever figures this out.
Mm-hmm.
So I bought my first Bitcoin at 300, right? Threw some cash at it. I wish I would have bought some Ethereum at 2 or whatever. Okay.
Yeah.
There's other ones that I threw some money in here and there and lost 100%, essentially, right? Now, Rich, do you wish you would have bought 100 Bitcoin at 300?
Yeah, but when would I have sold it?
Well, or if you didn't, whatever,
Yeah.
right? I wish I would have known in the 70s to put my allowance into gold instead of, toy cars,
Comic
right?
books.
Right? Well, let's think about this from the standpoint of what you just brought up with quantum computing and the next NVIDIA. Let's say you hear about a stock that, oh yeah, so and so went public. They're digging into quantum computing. Their share price is 50 cents a share.
Mm-hmm.
Throw $100 at it.
Right.
If you lose $100, oh well.
Right.
If you lose $500, depending on your income and your assets, right?
Mm-hmm.
But if it hits and it's the Bitcoin at 300 and it runs to 110,000, you're setting up your kids and your grandkids for just a few dollars on your end. So throw a flyer at it.
I agree with you. I did that with the Facebook IPO.
Mm-hmm.
And when I at the point I doubled my money, I sold it out and got rid of it because they also had pissed me off at that point too. But yeah, it's a great point.
So something to consider, guys, because that's certainly how I look at stuff. Here's the other buggy whip analogy I've heard in the past, and that is, at one point there were 1,000, 5,000 companies that made buggy whips, right? At some point there was one as the car took over, but I bet they made the best darn buggy whip ever. But the world moved on.
Yeah.
So the world is going to move on from whatever we think is cutting edge right now. So to that end, find who's doing quantum computing. Eventually, somebody's going to come along and eat NVIDIA's lunch. So a little bit of money deployed here and there, $100, a few $100. And as it starts to go, do a little more. And at some point, if a person wants to, let's say you bought 10 Bitcoin at 300, right? So that was $3,000. When it got to $600 a Bitcoin, sell half. Now you're playing with house money.
Okay, I don't know what the relationship is between NVIDIA and TSMC, which is the semiconductor manufacturer.
My understanding, which is rudimentary, NVIDIA doesn't make any chips at all. Is my understanding. Right. They design them. TSMC makes them.
Okay, so this is where I'm going with this. What happens to NVIDIA when China decides to move on Taiwan, and TSMC, of course, is in Taiwan?
They're going to get crushed.
They're going to get freaking hammered, So that's those black swan. Not even a black swan event. I think it's going to happen. Whether it happens, now.
I'd refer to that as, I heard the term gray swan recently.
Yeah, there we go.
I like that. You can tell what's coming. You just don't know when, right? So to that point, a way to play that, and we can dig into this at some point. I've debated doing a show, or it'd really be a series of shows on options, and a way to protect yourself against that is options. So you'd buy puts on NVIDIA for January of 2027 way low, and if something like that happens, you'll cash in it. It hedges your account. So you put a small amount of money in there, it would go up parabolically if NVIDIA were to crater from something like that. And if you lose all your money, well, your NVIDIA stock did just fine, so you don't really care.
Well, you can look at what China is doing. They're spending billions of dollars on these uh, pontoon ships to create highways
Hmm.
out of the ocean. Why the hell are they doing that?
Oh, I'm sure it's
Hmm.
just a big experiment.
Yeah,
That
come
is
on,
nothing.
it's coming, I hope Nvidia is preparing itself for when that shock hits, because it's gonna hit the markets hard.
I believe they're working with someone or building their own plant in Arizona. Sticks in my head, but I read a
Mm.
lot, guys. The details get blurry, so if somebody knows for sure, throw it out there.
It
So,
makes me wonder, and I'm sorry we'll get back to the show, but like, had we dodged a bullet with Kamala, but if
mhm.
Kamala was in there now, would Xi Jinping go, "This is my chance. I got a weak sister here that what's she gonna do?" But Trump may be the immovable object right now for him doing it. I don't know.
Yeah. So
Speculation. Hey, sorry about that, but
yeah, that's all good. Hit. Let's see what before we go back into that. Let's see what Don has to say here.
Don says the world moves on. How big was the hard drive on your first personal computer? What can
Yeah.
you get on a new one now?
Yeah.
1996, man. Lisa and I bought our first computer. Maybe it was 95, and it had 1 gigabyte. I think that was the biggest hard drive you could get at the time. And literally, we just chuckled with our $3,000
Hmm.
computer. Think
Yep.
about that, 3,000 for one
Yep.
gigabyte. My God, we'll never fill this thing up. I mean,
Yep.
we literally were saying that to each other.
Well, and that's the you know the joy of deflation, right? Look at the price of TVs. I remember when what we consider a normal size TV now was huge back then. It was like $1,200, right? Now you can run down to Walmart and buy it for on sale $200, right?
Yeah, I think Tilly, I remember the night he bought a giant plasma. I think it was a plasma screen. Michael, correct me if I'm wrong. Thousands of dollars, uh,
Yeah.
and plasma with the way of the dodo, because it had all
Yep.
kinds of problems. But man,
Yep.
at that day, it was so ahead of the time.
Yeah. Well, and that's where everybody wants to, you know, the deflation's bad. Well, depends.
Yeah.
That's deflation, right?
Hmm.
So overall, the system needs inflation, which is why they keep pumping money in because capitalism creates deflation through
Hmm.
competition.
True.
Same
It's a,
way, Nvidia right now, there's no deflation in that world. It's all inflation. But
hmm.
eventually, somebody's going to come along and compete with them.
Yeah.
And I really want to find when that competitor comes public. I really want to throw a little bit of money in there because somebody will do it better. It's a matter of time. So
Yeah. I just, and it's so short sighted of me, but I think like how, a semiconductor manufacturing plant costs. I mean, you might as well have a manned mission to Mars. I mean, I'm
mhm,
being a little bit facetious, but these are insanely expensive things
mhm,
to build and purchase lithography machines that make the semiconductors. Just it's a staggering amount of money, and Nvidia has, I mean, what percent of the market? 90 something
yeah,
percent.
yeah,
So
basically
Jesus,
100.
how the hell do you get there? But somebody will. I mean, that's just
Somebody
the way
will.
it works.
Yep. So, yeah, yeah. Tony's point there. Yep. First hard drive in
Yeah,
1986, 250 meg.
yeah.
Yep.
Cost me $400.
Yep.
What was four hundred
And that's
dollars back in
$400 back then,
1986? Woo, that was a lot
right?
of money.
Absolutely, it was. I
I
mean, the
was
minimum
paying
wage
80.
was
I was
was
paying
$3 an hour
68
or
cents a
something.
gallon of gas back then, right?
Yeah, for sure.
All the heady days of 1986.
Ah, yes. If only I would have
Gentilly
bought
was
some
still
muscle
in his
cars back
40s
then.
back then, Will. Did you know that?
Really?
Yeah.
Wow. Interesting. All right. So let's dive back in here. So we did our here's our silver one. And again, guys, this is right now you'd look at this and go, it's overbought. Well, you got to look at the other factors. So this is the very start. This is baby steps. This 200-day moving average. Okay. Let's go to the next one.
Okay.
All right. This one. A little different picture here.
Yep.
This one's below the 200-day. So initially I would look at this and go, it's gone up, it's corrected back, it's below the 200-day. Is chopping sideways there. If you look at the blue line over the last 6 months, it's in the parlance, it's chopping sideways, creating a base. If it gets some positive news here,
You see that?
this
Is that a
what
buy for you, Will?
it I would never buy or sell based just simply on the 200-day, but it's going to
Okay.
make me dig deeper.
Okay.
Okay, so to that, this is healthcare sector.
Ah. Hmm.
XLV is the ticker for this. This is a ETF of the overall healthcare sector. Well, now you start looking at the news, like we were talking about. What's happening to our population? Aging, right?
Mm-hmm.
So, if we're coming up on some tumultuous times, healthcare companies tend to pay a pretty good dividend, right?
Mm-hmm.
They're relatively stable. You can see from this chart, yes, it's gone up over time, but you don't get the rocket ship ride up or down. It just grinds upward. And now it's
Grinds
right,
up with demographics, doesn't it? I mean, it's
yep,
almost that predictable, is it not?
pretty close.
Yeah.
Now, the flip side of this is very dependent on government spending,
Mm-hmm.
but we've also seen they're pretty happy to print money.
Yep.
And if you keep the older folks happy, through subsidized, cheap, free, if you will, healthcare. I know Medicare isn't free. We all paid in. I get that, but there's no
Mm-hmm.
cost at the time of service. So if you keep that rolling, you're going to keep those folks happy. You're going to get elected. I see some tailwinds.
Yeah.
It would cause me to dig deeper, but the first thing that flagged my interest was this 200-day moving average.
Yeah.
That's where this can help you out. Okay.
Michael
Makes sense,
says
brother?
my first computer had a 886 processor, a big improvement over his Abacus. I knew it.
Yeah. But the abacus still works.
That is
So,
correct.
all right. Huh. How about this one? Is this a buy?
Ouch.
Okay. Took a big correction back in 21, right? And
Mm-hmm.
we're not playing stump the chump anymore here. This is BND. This is the Vanguard Total Bond Market. This is international. This is bonds everywhere in the world. Well,
Mm-hmm.
the reason it went down so much was because they started raising interest rates. Interest rates up equals bond prices down.
Yep.
Which way you suppose interest rates are going now, brother?
Right.
Right?
Yep.
But what initially piqued our interest? We see a big sell-off, and then you
Mm-hmm.
can see from 2022 with a lot of volatility, okay? From
Mm-hmm.
2022 to now, you can look, it's been trading in a channel there, right?
Mm-hmm.
And in the parlance, that's creating a base. Okay. Typically, when something creates a base for a while after a drop, it's getting ready to take off. And we know right now a quarter point cut is baked in the cake for this week. That's going to happen. It's just a matter of how quickly they're going to cut rates now. Rates being cut means bonds go up. So, and in a lot of international bonds, their rates drop even faster
Mm.
because they need to stimulate their economies, right? If these economies are being hurt right now because of the tariffs, they need to stimulate, right? So we again, the snapshot of the 200-day gave us a starting point. Then we apply knowledge about the news cycle and other things we're going to add over future shows here. Okay. And what's Don
Ooh,
say there?
dang, look at that. Don's got a great point here. Says, let me pull it up here. Balance the demographic influence with RFK Jr.'s redirection of healthcare in the industries around it. Yeah, that could really change that picture.
It could. And I would, the way I'm perceiving what Don's saying there is that can be a negative for your traditional healthcare, right?
Mm-hmm.
But here's the thing. I agree with the vast majority of what RFK Jr. talks about when it comes to healthcare. And, food is, I've long said food is a drug. Okay.
Mm.
And bang, however, it does not apply. It's all good stuff in here. Trust me.
No,
Okay.
no, it's not. It's poison.
It's my little fantasy world. Let me live in it. Okay. Because other than that, I eat pretty darn clean.
Mm-hmm.
However, can you imagine what it would take to change the minds
Mm-hmm.
of the population away from traditional healthcare right now?
Yeah.
It's like getting people to quit smoking or wear seatbelts. It's going to take a generation.
Well, just look at the vitriol that RFK Jr. got. I mean, again, it's if they only turn that attention to Fauci that they did to RFK Jr., we might actually fix something.
Crazy talk.
Yeah, I know, right? Dr. Fuller says, I grew up in Silicon Valley. I remember using cassette tape drives and hacking banks on 1500 baud modems before it was illegal.
Newfound respect for Dr. Fuller.
That's right.
So,
and we passed the FBI polygraph. None of us will ever know, but that's all.
That's right. So, bonds are very interesting right now. And full disclosure, I'm increasing my exposure to bonds right now because of this. churns out a nice little yield, and they've been beat down since 2021 when rates started going up to fight inflation.
Mm.
So, but a snapshot of the 200-day gave us an idea. That's the to me, that's the value of the long-term, the relationship of the price and the long-term average.
Mhm.
Okay. Now, could something happen that changes this? Absolutely.
You bet.
Set it and forget it money really doesn't work much anymore. Okay. All right. What do we got next?
Okay.
This is emerging market bonds.
Hmm.
Okay. So this would be China, India, Singapore, I don't know, Malaysia, take your pick, emerging markets.
Mhm.
Okay. Same general picture, right? But you'll notice it's further along because they started cutting rates before we are. Okay.
Okay.
So taker on this one is Echo Mike Bravo. I've also increased exposure to this. This is much more volatile as you see there, guys. So if you play in this pool, position sizing is your friend. Okay. I keep this one very small compared to other bond exposures because it'll keep you up at night otherwise.
Yeah.
All right. So let's go to the next one. Copper. Now this is one where we can also look at this and go, you might look at this and go, well, it's below the 200-day, right? So
Mhm.
that's sold off. Maybe that's a good buy. Well, let's think about what copper goes into. It goes into housing. How's the housing
Yeah.
market doing? What do we see back there way back about the housing employment, right? Kind of topping, right?
Mhm.
And that's construction. So the construction is where you use most of your copper at. So this is where you can get a snapshot off this, but then apply knowledge you pick up from other places as well. Okay. Full disclosure, I'm not touching copper with a 10-foot pole because it is, as you can see there, it is beyond volatile.
Yeah.
I've been a hero and a zero in the same week with copper,
Really.
and I'm not looking to play that game anymore. So,
Mm.
all right, but this is a point where okay, it's below the 200-day, but because of risk tolerance, what we know about what's going on, you go, no thanks. Okay, so
Yeah.
again, I can't reiterate enough, guys. I use this as the start of an idea.
Okay.
Okay.
Don says, I've got a son that's a doctor. He tells me that a lot of his patients come in having already diagnosed themselves using WebMD and other sites. He thinks that's a dramatic shift in how people view their healthcare in just the last 7 years that he's been in practice. I want to speak to that real quick because I was talking to my son about this. And me and Gentili was a consultant in healthcare for decades. He may still be. I'm not sure who his clients are, but this I had to push back hard on the ER doctor dealing with my youngest son, and finally I got him to do his freaking job. And here comes the nurse, and she's got just a plethora of syringes, and she starts to just stabbing him in the IV, and I'm like, "Well, time out. What are you doing? You're going to explain each one of those to me." And they don't like that, but I'm like, hey, this is the way healthcare is today. There was a time perhaps when we let our physician, dad, just do whatever, doc.
Yeah.
And now it's like, no, time out, because 1 in 10 Americans are going to be killed by their healthcare provider.
Mm-hmm.
That's crazy numbers.
It is.
It's third or fourth leading cause of death in America is our healthcare providers. It's a terrifying landscape. So
Mm-hmm.
don't just think you're going to run in here and start stabbing the IV bag with whatever the hell you want to. You're going to explain each one of those freaking things for me. There's like 7 things.
Yeah.
Anyway, I
Well,
don't know.
and to that point, anywhere else, we'd call that being a good consumer, right?
Exactly.
When we go to the medical industry, it's supposed to be like, just hold on. You just hold on there, country boy. You
Yeah.
need to let us do our job. Well, how about no?
Yeah, exactly.
So that's one area where the healthcare industry annoys me to no end.
Mm-hmm.
They tell us do this, do that, do the other thing. And it's like, well, I'm looking around here and I'm seeing a lot of unhealthy people who work here.
It's a fact, man.
I'm like, how about y'all take your own advice before you start preaching to me?
Exactly. Like,
And
you're
I have
obviously,
actually said that to a couple of ER docs who've ticked me off.
I
It
love
went
it.
over about as well as you're thinking. So
I don't care. You
yeah,
know, you're a
yeah,
service worker, buddy. Provide
mhm,
service.
that's it.
Yeah.
That's it. And yeah, you're a whole lot smarter than me and all that sort of stuff. And I will stipulate all those things right up front.
Hmm.
It's still my body, my wife, my children, whatever. You're going to explain it to me, and you can use little words to do it.
Yeah.
So, yeah.
Yeah. I mean, I could go all day on that topic. I have some strong opinions about the healthcare industry right now. Cruz is on. He says, "Good morning, AWS. Coin number 1928 up here in Rhode Island. Rich Tony is a friend and trains with me here in Rhode Island. Good people. Peter should be on too. New coin members from Rhode Island helping to spread the AWS Simplify." Yeah,
Awesome.
love Rhode Island. Can't say it enough, man. The politics is the only thing that makes me think about moving up there. It's just absolutely beautiful. Dr. Phillips says, tried making a pilot explain what he was going in flight once. Boy, that doesn't go over well at all.
See, I don't, I have no, I have people come up, hey, what happened? Why did we, whatever. I'll explain it to them. I mean, and probably whoever that guy was. I mean, pilots can be a little bit arrogant too. I've
No,
picked up on
Will,
that. I mean, I've
stop.
been flying airplane. I've been around pilots since I was 12. So, yeah, I've noticed a pattern, you know.
Mhm.
But I welcome when people ask questions. Absolutely.
Tony
I
says, "Do you
my,
know what
my
they call
personal
the?"
favorite is when they come on and say, "This is little Johnny's first flight." And I go, "What are the chances? Both of us? Really?" So, yeah.
That's a good one. Tony says, "Do you know what they call the guy that finished last in med school?" The answer is doctor.
Doctor. Yep, absolutely. All right. So to copper here, just because it's below the 200-day doesn't mean it's necessarily a good buy. Doesn't mean it's a good purchase for you based on other factors. Like here, you can see the volatility. I
Mhm.
mean, I didn't look at the exact date, but look at that spike up to 36 and then a crater, right?
Mm.
I have no interest in playing that game.
Well, I mean, it's only going one way for the foreseeable future until we find something better.
Yeah.
I mean,
Yeah,
but like you said,
and
it's
if a person
volatile
has a
though.
and if a person has a long enough timeline,
Yes.
let's say I'm going to buy this copper. If you're interested, there's the ticker in the upper left, CPER,
Mhm.
is the ETF for copper. If you got a long enough timeline, and I would suggest a small enough position of your portfolio or a lot of risk tolerance, um, you know, maybe put. I'm spitballing numbers here, guys, not financial advice. Maybe put 0.5% of your portfolio into copper.
Mhm.
Bet on the electrification of everything.
Yeah.
It could work out and it might not, but I'm not interested in playing the up and down game on that. I think there's better ways to play the electrification of everything.
Yeah.
Okay. Here was the struggle for today's show, finding something below the 200-day.
Wow.
I searched and searched and searched and searched. I have quite an inventory of tickers across the world, across stocks, ETFs. It was tough.
Did you find him?
That's how much everything's
There you go.
run.
Wow.
Okay. But I found something.
You-
So
You're not going to tell us what it is. Evil. You are
I have to.
evil.
Well, I'm building a position in it right now before everybody else buys. It's a pump and dump scheme, Wolf of Wall Street, all this stuff. But let's look at this. It's well below the
Wolf of
200-day.
Wisconsin. I like that.
What's that?
The Wolf of Wisconsin.
There you go. That's funny right there.
Yeah.
So you look at this and go, huh? Might this be a good buy? Might this be a good buy? It piqued my curiosity.
Looks good.
Okay.
Can I go to the
So
next
this is
slide?
where we apply knowledge of what is happening and what we think could happen in the future. And actually, you brought up the whole conversation of it earlier. It was very, very good. Any guesses what this might be? It's a
No.
tough one. I wouldn't have guessed it.
No.
Go to the next slide. It's the US
Oh,
dollar.
wow. Whoa.
Now, if you just looked at this chart, you'd go, well, that's due to come up, right?
Uh-huh.
But look at the knowledge we've talked about throughout the show. They're cutting rates this week. That's pretty much a given. They're probably going to announce their cutting rates going forward. That decreases the value of the dollar. We know what whoever Trump picks to be in charge of the Fed, you know which way they're going to go. We
Mm-hmm.
got $5 trillion of room to go increase the national debt, right?
Mm-hmm.
Hmm. I'm
How
not
much of
so
that have they
sure.
used already, Will? Do we know? That
I
5,000
have no idea.
daily?
No,
Yeah.
no idea. So this is I found something below the 200 day and I don't want to buy it.
No.
Okay. Now, if it starts moving up, if news cycle changes, let's say some sort of crisis happens in the world, there will be a flight to the US dollar. People will sell assets in other places
Unless
and
China
just
wins, then there'll
that's
be a
true,
flight to the renminbi.
right? But one thing you mind, if the dollar starts moving up because of whatever reason, everything else is going down.
You know what? We may need to revisit this every couple months, don't you think? This
Yeah,
is a
you know,
telling way.
maybe do a quarterly show on this.
Yeah.
Yeah, I like that. Let's start doing that, and that works
Yeah.
out good. We'll call this one the third quarter. It's a month earlier, what have you.
Mhm.
But I like that idea.
Yeah, me
Let's
too.
put that on the books, and we can do that. But this is where we just look at that chart and go, hey, looks like a pretty good buy. If we go back to that, it's been going sideways since what 2023,
Mhm.
and then it dropped down. Hey,
Mhm.
right? But knowledge of the news cycle, understanding how assets work together. I'm going to keep an eye on it, but I'm not a buyer of the dollar at this point.
Mhm.
Okay. So I found something below the 200 day and I don't want to buy it. So
Mm.
my point is it's a starting point, but then we apply the other knowledge.
Yeah.
Okay. But you'll hear if you turn on the Cartoon Network known as CNBC, they'll be like, "It's below the 200 day. Buy, buy, buy." Yeah, not so much.
Cartoon Network. That was good. Sorry.
Okay.
I've got to get my composure. That was great.
Thank you. All right, so then we're coming up on the end here, guys. So a golden cross. All right, so we've got a 200-day moving average, a long-term moving average, and then you have shorter term. You can make whatever you want. You can make a 199-day moving average on your Yahoo Finance or Trading View or whatever. Okay. The Typically people look at the 200-day, the 100-day, the 50-day, and the 20-day. 20 days basically a month of trading. Okay.
Mhm.
So then you look at the relationship between these different moving averages, short term versus long term. Most people look at 50-day versus 200-day. Okay. I
Mhm.
will tell you in my experience of late, meaning the last 4 or 5 years, the algorithms really look at the 20-day. So you start seeing stuff move above or below the 20-day rather. Algorithms will start trading off of that. Okay.
Mm.
So in a bigger picture here, so golden cross is when a relatively short term moving average crosses above or below, I'm sorry, above on the golden cross, crosses above the long term moving average. Okay. If we go to the next one, we'll look at a chart of this
Okay.
because pictures help. So we look at our green circle there. Your blue line is still your asset price. This is Tesla for whatever it's worth.
Okay.
Your red line is your 200-day moving average. Yellow line is a 50-day moving average.
Mm.
So your short term moving average was, if you look at the left of the chart, it went below the long term. And then as the stock price started to build, the 50-day moving average, basically 2 months worth of trading, moves through the longer term. And then that's called a golden cross because you're going to make some gold and off it goes. Doesn't always work out. Okay. Here's the danger of it, brother. And I didn't put it in the show notes, but we'll talk about it. If you look further right, you can see where the yellow line crosses the red line again. That's called a death cross. Okay.
On the way down, it's like, ooh,
All the way down. But look, if you wait for the death cross to sell, you already lost your money,
yeah.
right? So this is where looking at the different moving averages, like we've talked about, matters. So let's say your golden cross happens. It's not a guaranteed buy in my world. Okay.
Oh,
Going to look
really?
at the news cycle, going to look at all these other things, right? But it'll okay. So the price moved over the 200-day, right? Just the
Mhm.
left of that green circle. And then the moving average goes through. Well, it takes longer to pull a moving average, right? So you take some of the volatility out.
Mhm.
So let's say we buy in at the golden cross and we sell out at the death cross. We
Mhm.
made basically nothing.
Right.
Okay.
Balances it out.
But let's say a person says, I'm going to put $20,000 into Tesla stock, and I'm never going to go below $20,000 in Tesla stock. Okay. And moving, but I'll go above that up to whatever some maximum. Okay. And the golden cross happens, and you go from 20 to, let's say you put 40,000 in there, and you ride that up from 200 to 400 ish, 480,
Mm-hmm.
whatever. Okay. Actually, we
It
use
hit
400.
480, brother. I mean, that's
It hit
almost.
480, but
Yeah.
we never know. I mean, we can't predict what's going to happen, right?
Mm-hmm.
But when that goes back through the shorter term moving average, when the blue line, the asset price moves through the 50-day here in early 2025 through at
Mm-hmm.
about 400, you pull yourself back down to your $20,000 minimum. Take profits.
And you realize the gain, yeah.
You realize that gain.
Mm-hmm.
And then you let it ride back down and you wait for your next opportunity. You will notice that when you start using these moving averages, this is, I mean, you're going to wait months sometimes.
All right.
Right? So something to keep in mind. Now, can you get head faked out? If I sold back down to my min position every time it crossed the 50-day, look how many times I would have sold out
I
there
know.
from August through November.
Yeah.
But the argument is the 50-day is still above the 200-day, so you'll hang on. It's not predictive. We don't know. Elon Musk could come out and tweet something, and we don't know. And
Mm-hmm.
that's the hardest part about playing this game is you don't know. But we do know in a longer term thing, the dollar becomes worth less over time,
Mm-hmm.
and the overall trend is going to be up. The system is, if you will, rigged for everything to keep going up
Mm-hmm.
because the value of the dollar keeps going down. So this is the game within the game, and there's a bajillion other games within this game. So this is a starting point, the 200-day.
Mark has a great question here.
Right?
Throw it here. It says, "Hi, Will. With Trump encouraging stable coins, WFL1, USD1, how will that affect your intention to buy bonds if interest rates go down?"
I will buy with both hands with leverage.
Okay.
And here's why. The stable part of stable coins comes from buying US treasuries.
Mm-hmm.
That's what they buy to get the stable part of that. So you put your money into a stable coin, and as it sits, I'm not that familiar with the actual stable coin, what it does for you. I don't think it earns any interest for you, but I stand by to be corrected on that. Okay. But as I understand it right now, it pays no interest. However, if I go buy a treasury, it pays interest. Why would I buy a stable coin?
Mm-hmm.
Right? But this is also why the government, Trump, is pushing so hard for stable coins. Because if they say, yeah, stable coins are, you can put it on your balance sheet and it's good as holding money.
Mm-hmm.
Well, when you buy the Rich Brown stable coin, Rich Brown takes that money that's deposited by Will and Tony and Dr. Fuller and Greg and Michael, and you go buy treasuries
Mm-hmm.
that are currently yielding 3.5%. And you make the spread on that.
Mm-hmm.
And then you operate the business. Well, why am I going to give you the money for free? By free, I mean no return on capital. So you can go make 3.5%. I'm not doing that.
Right.
But when when trillions of dollars flow into stable coins and they all go buy treasuries, that's going to drive the price of treasuries up, isn't it?
Mm-hmm. Yeah.
And when the price of treasuries go up, that's going to drag every bond price in the world up.
Mm-hmm.
Now, they're going to put right now, the last estimate I saw was 2 to 3 trillion will flow into stable coins to begin with. That's an estimate. Take it for what it's worth. It's a start. So to your point, if that really takes off, I'm going to buy bonds with both hands. I probably won't even own a stock because
Yeah.
why bother?
Mm-hmm. Exactly.
That's my take on it. It's worth exactly half of what you paid for it.
Mm-hmm.
So that will run stuff up. What's Tony asked there? I think it's a good question to dig into a little bit.
Tony says, let's see here. Question: what industries/companies do you think AI will be the first to eliminate?
Haven't really thought about that. Any
Haven't
thoughts
either.
on that one, brother?
No, I mean, through AI and automation, self-driving trucks. I mean, I could see those going
Mm-hmm.
away, but not in the next 18 months, but over time, definitely.
At one point to that, UPS was working on a system that relied on 5G cell communication for it'd be a train, if you will, of three semis.
Mhm.
A human in the first one, and the next two were AI wasn't the word was used. They were autonomously
Mhm.
driven, and they just did whatever the front truck did.
Mhm.
Changed lanes. And UPS was trying to cut out the air, a lot of the air side of their operation using these because I-80 goes east west, and there'd be stations set up along
Mhm.
there to do this. I don't know where that is. They were waiting for the 5G network to get better coverage. I'm going to say this is probably 3, 4 years ago when I first heard of this, and I haven't heard anything about it since. So they may well have given up. But stuff
Mhm.
like that can be repeatable, um, you know, um, could start there. I'd say
Well, look at the
any.
labor costs. I mean, I'm looking right now, as of late 2023, a full-time UPS driver was set to make an average of 102,000 in wages plus an additional 50,000 in benefits.
Mhm.
I mean, that's insane money for where I live.
Yeah.
I mean, insane money.
Yep.
A nurse, a general practitioner, an attorney, they don't make that kind of money here.
Right.
So, my God, how much money can that company make if they
Mhm.
eliminate that
Yeah.
insane amount of money they're paying?
Yep. So I would say in general, any repetitive process
Hmm.
that can be that decision making is fairly binary on doesn't require
Accounting,
judgment. Was that?
programming,
Yeah.
creatives, they're all smoked.
Yeah.
AI is a much better product than that. Dr. Fuller says AI will not eliminate the American Warrior Show. Invest according.
I think the way he's thinking.
Yeah.
I mean, we're above the 200 day, but we're trending up.
Hmm.
Yep.
I love this. Your
Go.
closeout slide here. Risk is
Yep.
always better than regret.
Yep. And I will add into that risk at the appropriate size.
Yeah,
So like
sure.
go back to our if we went back to our copper chart and the volatility of that would I put half of my portfolio into that? Nope.
Hmm.
0.5%, maybe. Okay. But so appropriately sized risk, you know, do I invest differently for my children than I do for myself? Absolutely.
Sure. Time
They've got
horizon is completely different.
absolutely. They got 40 plus years to make it back or dollar cost average in lower and all that sort of stuff. Absolutely. Totally different. So the right amount of risk for you based on your situation is the way to go. And then, throw a couple of those. I encourage everybody, throw a couple of those flyers in there. If somebody comes along and says we're going to beat Nvidia, okay, probably not. But I sure wish I would have put $500 into Microsoft in 1990, whatever, when they went public,
Hmm.
right? And they said they were going to revolutionize the PC, all that stuff, right? $500 in Apple. Take your pick,
Yeah.
right? Netflix, whatever. It doesn't. Some of those exponential growth stories like that, you don't have to put a lot of money in to start to
There's,
really benefit from those.
yeah, but I'm thinking that just there's a book, I think it's called The Discipline of Market Leaders, and it came out in the mid 90s, and it's touting, go back and read a book like that, and it's touting companies that are long since gone,
Hmm.
So I think for those of us that sit out here and beat ourselves up, man, I should have bought that. There's no way to know, whether
Right.
you're investing in something that's going to go tits
Hmm.
up or crush it. And for
Yeah.
everyone every Nvidia out there, there's 1,000 other companies. Like you said, with Bitcoin, there's a lot of thousands of coins out there now, and most of them are worthless.
Yeah.
And at some point, I think Bitcoin will be worthless because guess what? Going back to Gentili's point about quantum computing, that can solve any password problem in a nanosecond. Like it's encrypted to this degree, and a quantum computer is that's cute. Your encryption's cute. I
Hmm.
appreciate that. So what's that going to do to the blockchain?
Don't know.
Oh, I don't know.
But
Not good.
here's what I know. If I would have held on to those ones I bought at 300, I'd be retired now.
Yeah, that's true.
So I don't really care.
So
And
you
that
so you at one point had 300 Bitcoin,
no. I
right?
bought at 300.
Oh, okay. So say,
No. Gosh, I'd be retired either way probably.
oof.
But the point being, okay. So to your point, which is very valid, you've got a few success stories and you have say hundreds of failures, right? So be a little judicious. I'm not saying throw money at everything, but let's say I want to make the math easy on myself. Say a person puts $1,000 each into each of the next 10 companies that say they're going to beat NVIDIA. Will beat me to it. The Haktua coin. That went through my head when you were talking about that. The let's say you buy 10 at 1,000 for a $10,000 total gamble, which is what it is at that point. Okay. One goes 10x, you make up for all the others.
True.
Right. And there's a chance they all go to zero, which is the gambling portion of that. So make the dollar amount whatever makes you comfy. $100, $250, whatever it is, right? And that's the side of it where all of a sudden, you're looking at, 100 baggers, 100x stuff. Okay. I mean, Netflix was $4 during the GFC. What is it now? You got your Google machine handy there?
For Netflix?
Yeah.
Stock. It's now 1,249.
Could have bought it at 4 in 2009.
Well, you know why? It cratered because Reed Hastings, the CEO at the time, made a really stupid move and tried to split the company. And, members revolted. I was one of them. Like when I saw that, I opened my laptop that morning and I saw his stupid ass idea. I literally leaned over and, hey, Lisa, cancel Netflix immediately. Yeah. And everybody did that. And guess what?
But let's say a guy threw $1,000 of that right now. What do you got? Yeah, a lot of money.
Right? Oh, I know. Trust me. If I could go back in time I would have canceled it and then I would have bought the stock. Because
but here's the point, and this is actually my beautiful bride Greta and I were talking about this last night. Use the experience that we have now. We lived through the .com bubble. We lived through the GFC. We lived through COVID. Here's the pattern that I've picked up on, and we can somewhat validate this. When they start cutting interest rates, that typically signals the recession's inbound, because they're looking at backward looking indicators, but they're trying to project forward, right? So we can see unemployment going up. We can see these things happening, right? What signals the start of the bottom is when they start printing money.
Yeah.
Because that causes inflation. Inflation causes asset prices to go up. And we can look back at the .com bubble. They cut interest rates prior to the .com bubble. They didn't print money. And what happened? It took 13 years to get back to break even.
They're never going to do that anymore.
Exactly right.
Never.
So we're looking at real estate in Florida, locally, stuff like that. And I am in no rush in Florida. It just keeps cratering. But when they start printing money, and they will at some point start printing money, that will be the signal that the bottom is forming. Not saying I'm going to go on buy that day. It might take 6 months. But at that point, the bottom is forming. So to your point about you wish you would have canceled and bought the stock, well, I wish I would have done the same thing, right? However, now we can take that knowledge we have, and whenever that crash happens, it will happen at some point. We can look at the start with the 200-day. Look how far it is below the long-term trend. And they just started printing money. I've seen this game before. And that's the benefit of some gray hair and seeing a few cycles. And we didn't know that back then. There wasn't the information out there, right? You and I weren't as experienced at this stuff. So yeah, I like to beat myself up as much as the next guy on this stuff. But the reality is there's no way we could have known back then what we know now.
No, I mean, I tell people all the time, you don't know the power of the internet. If you can't if you can't get rich now, and rich is relative, I understand that. If you can't live comfortably now with the internet, you're doomed.
Yeah, because you're doing it wrong.
Yeah, you have access to information that we will never. Absolutely. And Michael says, good observation, Will. Yeah, totally.
Very kind of you, sir. Appreciate that. So now let's use that knowledge going forward. They're starting to raise rates. We've seen this game before. I'm sorry, lower rates. Sorry, they're starting to lower rates now. We see what's happening in residential construction employment starting. Don't try to front run a leading indicator. I can tell you that doesn't work out well. Okay. We can see unemployment in general starting to rise, right? We can see the setup for this. It will take months to play out unless there's an acute crisis of some sort. Okay. And then, so this is me, not financial advice. It's worth half of what you're paying for it. I'm moving generally slowly towards more defensive stuff. Bonds. They're beat down. If you look at where that chart is compared to its long-term trend, it's way down. It's got a lot of room to run. And in the meantime, it'll pay me a nice little 3-4% dividend. And it's real easy to sleep at night.
Yeah.
So, and there'll be, even within that, even if there's a crash, there'll be winners within that. NVIDIA will be a huge winner because when the economy takes a dump, companies will be looking to invest money in things that help them have fewer employees.
Yeah.
Right. So, there'll be an initial shock and then start looking where these companies are going to save money. Look back in the 80s. Robotics companies did great. You got ROBT, I think, is robotics ETF. I haven't looked at it in forever. But start kind of developing a game plan. Where would you deploy those assets at? For me, it kind of helps if I think of it like a board game, kind of like a Monopoly game. Where would I deploy that at? We know which properties we want to own on Monopoly, right? It's no different here. Look back at your long-term charts. What did well during the last recessions? And then what did good coming out of there?
But my point is though, about the recession thing, it's like, if nobody wants to have a recession. So if they're going to change the definition, they're going to play all kinds of funky math. Are we ever going to see the recession to take advantage of some of these indicators?
Yeah, we will.
Yeah, okay.
I believe that. And I take your point very well because they've really headed off a number of recessions here. I mean, let's face it, COVID should have been a depression, a total crash, right? So to your point, I agree. We'll never see another full-blown GFC, I don't think. I don't think we'll see that.
Print money.
They'll print money well before that.
Yeah.
The blueprint's out there. But there will be something that starts to happen like that. I mean, let's face it, 2022, the stock market was down, NASDAQ was down, I think 30%. So SPY down 20%-ish, right? And what happened? They started underpinning that stuff. So you might see pick your number, 40% drop in the NASDAQ, 30% in the S&P 500. As soon as they start accommodating for that again, printing money, lowering rates, that's a good time to be like, okay, which we've seen this game before. When they start printing money, it causes inflation, assets go up.
Yeah. No, outstanding show today, brother. And, just for those of you that American Warrior Society, American Warrior Show, and you guys are talking about this. Hey, as Will says almost every week, this is how we take care of our families. It's not just being physically prepared with the guns and the jits and all the other cool guy kit. It's also financially preparing them so that they can have a better future, and have a college fund sitting there. So it's our responsibility as parents and grandparents to prepare the way for the next generation, keep them safe and avoid these things. And part of that is just what we looked at today, the 20 days of May,
Yep.
200 days.
Absolutely. So, well, I feel miserably trying to move us back down towards an hour here. I think this is actually longer than the shows have been recently. Yeah. So sorry about that, guys. So hopefully it was worth your time. I appreciate everybody sticking around. And if you don't mind, I'll take us out, brother.
Please.
The fight is coming. Be ready.